Jani of Motilal Oswal Financial Services into the discussion and on the show now. Hemang, thank you very much for joining in. The first question is on Tata Motors. Now, Motilal Oswal is bullish on Tata Motors. I believe your target price is close to 525. So there is a lot of upside from here on. Given what Sonia had to say, the concerns about exports slowing down, your thoughts on Tata Motors and how would you view your buy call?
So good afternoon, Rima. I think Tata Motor has seen a relatively better performance in the past 2 to 3 months. And if you look at the data points, the monthly numbers, particularly from China, Eurozone, have been better. Even on the margin front, the situation is looking much better. So, despite Tata Motors being a little difficult stock to track, the sense that we are getting is that things are looking much better. Even on the domestic side, if you look at their passenger vehicles and CV part, it's doing relatively better. So we think that at this point, the company should do much better. Yes, the recent data points, particularly from US, Eurozone, are the challenges, but we think that overall, from a risk reward point of view, Tata Motor is better placed in the auto sector at this point.
And Bajaj Auto and the fact that they have to slash down production?
So clearly, two-wheeler has been a difficult sector last almost 1 year. We've seen some positive data points in Feb, but when we look at Bajaj Auto, 45% of their revenues is export-driven, and given the challenges in the African nation, I think we will have some issue in the near term, at least for let's say about 3 to 6 months. So clearly, this is a sector which has been, a big avoid for us. I think from an auto OEM perspective, we prefer Ashok Leyland and Maruti. And from the ancillary perspective, we like Motherson and Bharat Forge at this point.
Okay, got that. Hemang, do you track macro tech developers, Lodha? I mean, there is some brokerage commentary out there today, a very favorable commentary saying that if you're looking at longer term valuations, then the valuations now aren't as close to the earlier peak. I mean, the past cycle and the peak that we saw over there. That's one view on the street. But your thoughts? It's quite a stunner today, the move almost 15%.
So Surbi, yes, today's move is, big stunner. But when you look at the stock from, let's say, last about a month perspective, I think the stock has lost almost about 30-35%. And this is much more than most of the other real estate stocks. And, our view on Lodha in particular and the real estate sector has been positive. If you look at the new registrations, the numbers, the commentary, that has been quite good. I think the only worrying point could be that if the interest rates continue to remain higher, this entire momentum can actually slow down. And that is what is actually, causing some sort of profit booking there. We like Lodha. I think there is a massive institutional selling, which is why the stock is down. We haven't really come across any negative news flow or data points on that. So positive bias on Lodha as such.
Even with this massive rise that we're seeing, it's basically back to, it's kind of recouped Friday's losses and a little bit more. That's about it. Basically, somewhere in the middle of the Thursday's bar is where Lodha has gotten to. And of course, it fell from 1150 kind of levels all the way down to, around 700. So that was a very large correction, as Hemang was pointing out. Now, Zee is correcting sharply down by 6-7%. And we learned from sources that exchanges are unlikely to take a firm view on the re-inclusion of the stock back into the F&O segment. Yash is here with what he's picking up. Yash, over to you.
Well, Prashant, I'll start with a quick context. February 23rd was when NCLT admitted Zee Entertainment under IBC proceedings. The very next day, NSE came out with a statement saying that they will exclude Zee Entertainment from the F&O segment, put more restrictions on the counter, and they had cited, shortlisting of Zee Entertainment under the IBC process. Now, of course, there were questions in the market on after NCLT putting a stay on NCLT's IBC order, would Zee Entertainment be re-included in the F&O segment? Here, what we've been given to understand from our sources is that exchanges are unlikely to take a view immediately on including Zee Entertainment back into the F&O segment. Exchanges, essentially, the note which they've taken is that NCLT has just put a stay on the NCLT proceedings under the IBC process, and it's not essentially a disposing of the entire matter, is what exchanges at this moment seem to be considering. Also, some views from market regulator SEBI are sought, since it's a new situation in terms of what is to be done in a similar situation. Of course, with this particular clause of staying out of the FNO segment, there are various restrictions which come on the stock. No fresh monthly contracts post expiration of Feb 2023 contracts. Existing March and April 2023 contracts will continue. Also, margin of 100% on all existing contracts. So all these restrictions are expected to continue on the stock till exchanges take a proper view on it.
All right, Yash, thanks very much for that. Now, Hemang, what exchanges may do, we have no idea. But is this an issue which you think will linger for long, or, I mean, as many believe that if this does start to endanger the merger with Sony, the matter, the quickest way is to pay up, settle the matter, and move on. What's your sense, Hemang? Yeah.
Absolutely, Prashant. I think just for about 83 crore matter, now the loss in the market cap has been more than about 30%. And that too after, seeing a massive correction over last 12 months or so. So I think, Prashant, the point is not whether it is included back in F&O or no, but, because of the way things have panned out on the ad revenue front last quarter, now you have IPL for about a quarter, which will have another dent on the ad revenues, and this entire issue of NCLT and the F&O exclusion. So I think a lot of negative news around it. We think that the fall in the market cap is far more than what is justified. But because the merger process could get delayed and the ad revenue visibility is not looking that good for next quarter or so, I think the stock can remain subdued. But I think definitely for somebody who's looking at a 1 or 2 year perspective, this kind of a steep correction provides a good entry point also.
Even if there is a possibility that the deal doesn't go through, you would still say it's worth the risk, worth the bet?
I think, Rima, the possibility of the deal not going through is very low at this point of time. I think this matter is more of a technical matter where some settlement can be reached out since the amount involved is not too big. So I do not think that the merger itself will be endangered because of this.
Got it. Do stay on, Hemang. Need to slip into a very short break. We'll come back with more on the markets. We'll also invite Vinay Jaisingh of JM Financial on the other side.